All right. I'm not broke. My DJI mic just is dead. I didn't get a chance to charge it. But yesterday, right, I need to break down this trade that we took because it's pretty sick. Really cool example. I've been teaching for the past few years as a mentor. I trade futures. I help people use funded accounts in order to make profit. And usually this is like the best risk parameter to take in life. Some people think that risk comes per trade, but it also comes with how you interact with the trade. Are you using your own money or using someone else's money, right? So that being said, using our prop firm account, we want to focus on losing a little bit and making the most. So the strategies that I've been focusing on is to show my students when they should cut the trade immediately when it isn't going their way and accept losses because the win is going to be bigger, right? Perfect example. So yesterday the market opens, and this is the market open time. You can see at the bottom here at 9:30. So 9:30 opens, and we get the first drop off. During that time, we gave a little economic breakdown, which I'll put in a different video for you guys. This here started off with a seller's dome, what I teach my students that says the market cannot go higher. So it more than likely will start to go lower. We were not involved in the sell side at this current moment. So we watched this take place. This is an algorithmic move. Every time we see a series of candles with no candle interruptions, this becomes a box for us. So that's one box. You see another series of candles. That's another box, right? The further these boxes drop, the more profit we'll make. So we have multiple series of candles, one box, two box, right? Here's a third box being created now, fourth box being created now. So none of these boxes actually broke the highs, like their own highs. Each box has their own imbalances in there. Here's imbalance 1, imbalance 2. In this box, we have imbalance 1 and imbalance 2. In this box, we have imbalance 1 and imbalance 2. So all we're doing is trading box for box. This trade here, we wanted to take the buy side. We have a sell side dome, but we put a buy limit above here to see if we would get filled, and then usually we'll take the next imbalance. But we didn't get filled, so we didn't lose that trade, but I count it as a loss because we still were going to take it, but we lost $0 on it. But mentally, I'll take note of that. Second one, here we actually closed the imbalance 1, dropped under with a dome, and then we have the break. So I did buy this, stop loss at the bottom, lost about $300. Next one here, we have the imbalance that broke. We also bought this, stop loss at the bottom. That put us in the boat of losing, quote unquote, 3 trades. Now that we have those boxes out of the way, the imbalances and the domes, also, let's go back to just traditional trend lines. You can see now we have so many highs to reference where we now have a trend line. I'll make this trend line a little thicker for us. So along with this trend line, we also have psychological levels, which are like dollars and quarters on the market. So you can see here, 23,000. And then we have 975. And then we have 950, 925, and 900. We already fell from the top here of 25 cents. So if we think about this like quarters, that's 1 quarter, 2 quarters, 3 quarters. That's a full 100. And then here's 25, and then here's 50. That's 150 points of a downtrend. So eventually, one of these quarters has to stop us and actually give somewhat of a retracement. And we said these imbalances, this imbalance, never been touched before. This imbalance, never been touched before. This imbalance, never been touched before. So we have 3 levels to claim if we do take the buy side down at this area. So this is why our trade went from losing 300 here, 300 here to now making over $5,000 as we recover that retracement. So I'll do somewhat of a replay here, but what we're looking for is that psychological level and a break of that trend line. And if it comes with a picture that shows us an imbalance or a dome, we can take buys on it. So I'll play a few candles for us so we can watch that in real time. I'll just press the play button and let it ride. It's going to go a bit fast, but you'll see it in real time, and then we'll just talk about the aftermath of it. So here we have almost a touch of 22,900. We have an imbalance picture here. That imbalance picture broke, and this is our first time breaking the trend line as well. If we look at the whole picture, the square, we want this to actually break as well. So we can take buys on this buyer's dome. That's buys for us. Stop loss under. We're waiting for the actual break of that level. If this is our entry, we have proper confirmation to take the buy side because the sell side's done. We also have 22,900 that was just missed, and we need to start reclaiming these quarter levels. We also have another buyer's dome here, which will help us manage our risk. So now that buyer's dome should take us higher, and if they want to stop those guys out, they would come down to this level. If they liquidate that level, they could potentially make another impulsive move to the upside. Our imbalance, this is imbalance 1. First time we've ever touched this level. This is a good price target for us. And then here's imbalance 2. Notice that drop off coming all the way back down to stop whoever these buyers are out of the picture. This is the imbalance level. We can always take another trade from that and carry this trade even further. But we had 10 contracts at the bottom. So I'm just going to buy 10 contracts here because this is where we used to buy them, where we should have bought them here. And I just want to show you guys what that profit would have been. Even this would have been a really good buy opportunity. So we only spend 1 hour a day on the market. I teach my students to be a 1 hour trader. You got 1 hour to use these strategies and make some money on the markets. You don't want to turn the market into a 9 to 5. You know what I mean? You got this. You can be free and make money faster than you could if you went to work. So if you're spending 8 hours a day on this, sometimes that doesn't mean you're actually going to make money. Now you're spending 8 hours a day, but in your first hour, you might have made $1,000. And then in the next 7 hours, you gave away $300 at a time until you went negative on the day. That's not what we're trying to do. We're trying to be efficient, but also understand you're a human being and you have cognitive power that does have a duration on it. So in the beginning, if you can have 1 hour of pure focus, use it. And if you don't earn anything from it, that doesn't mean you lost today. You know what I mean? You have to realize that you're going to be trading for the rest of your life, especially if you're looking to get out of that matrix ideology and just have money be something that you use as a currency to give you back some time in your life, right? Some people want money because of validation or the things that they're going to buy. It's a bit difficult to use money for those things that don't bring back that peace, because without peace, you can't trade and you can't have that focus. So this is a whole mental switch up that you need to have. I've been trading for 10 years and this is the things that I've been able to discover. So I'm going to just tell you how it is, because I have a life that I've always wanted, and I see a lot of people. I get a lot of other men in my life to tell me that I'm living the dream. So I'm going to extend this message forward with that much authority, right? So if I am living the dream, then this is what you need to hear, because this is how the dream was made. You understand? So this is why I'm going back and we're doing this kind of stuff. So look at that buy that we would have put in here. I pressed the buy button, but again, Wi-Fi is not really operating, but perfect buy opportunity. Again, like we said, this is our buyer's dome. Take those guys out, pick these guys up. There's another buyer's dome here for us to take. Here's our last imbalance that we're looking to get filled. I was already off the market at 10:30. So 10:30 was my cutoff. 1 hour a day. I start at 9:30 to 10:30 every day in my live Discord community. So here we're getting that run up and we're looking for that last imbalance, that last quarter here. But overall, that's the trade. That's the breakdown. I want to keep the video as simple as possible because I want you to see me and say, okay, I should be able to give 5 to 10 minutes on what this is, because I'm here for impact. I'm not here for your entertainment. You know what I mean? I want you to be able to see my videos and say, okay, yeah, I'm going to tune into this because I'm going to learn something. And when you walk away from it, at least you can go look at the market the way I just taught you. This is a quick crash course on something that really had a successful trade yesterday. And if you can use some of these entry models, confirmations, or perspectives to help you understand that these are areas of resistance or support, your next trade might make you some money, and maybe you might want to spend that money with me inside of my community so we can continue in growing this message together. But for now, I'll catch y'all, and stay tuned. I'm going to try to do this shit every day. So I'm going to make sure I show up for y'all just like I show up for me. So peace.